to Wednesday Live. My name is Lillian Njovu. I'm very glad to be here yet again. To all those that have been consistently following and tuning in to our Wednesday Live, we appreciate you, and we just want to say thank you for your continuous support, but much more. Do not forget to drag people along so that they could join you and also get the literacy, the financial literacy, and the right tools that they need for their businesses, right? Because Too Many Payments is all about empowering you and helping you thrive in your businesses. Now, this evening, I have an interesting topic to discuss, which is introduction to financial statements. If you've been following me for a while now, financial statements here are not a foreign language, or more so a language that is far-fetched from people who are doing businesses. And so if you are new, please acquaint yourself with these statements. But if you would also want a deeper understanding, or even just to have a much broader understanding of what we're talking about, to build on this knowledge, you could go back to the previous videos that will help you have the foundations, the right foundation, to help you get started and understand what we're talking about. But financial statements are simply essential tools that are used for your business finances, that will just help you to assess, will help you to analyze, will help you to make strategic decisions. Every decision that you will have to make in your business will be derived from the financial statements, reading them, understanding them, and building them up. So it starts with building them up, and that is why when I talk about you going back to the previous videos, we've spoken about the importance of financial records, and it stems from there. Financial statements stem from good record keeping. If you do not have a system in your business that keeps your records thoroughly, or even a system in your business that helps you to gather the data and transform it into meaningful information, you better get started, especially that this is 2024. A month has just passed on. You could do yourself a favor by catching up and ensuring that all financial information that relates to your business is in place. Now, moving on to today's topic, I would just love to highlight a few areas, or rather just give an introduction about what financial statements are. As I've mentioned, financial statements are simply essential tools for your business that will help you to have a financial check in your business, or even monitor the performance of your business. In a nutshell, there are several definitions of financial statements, but that in a nutshell explains what financial statements are. Now, there are three types of financial statements that I would love to highlight and bring to your attention this evening. The first statement that you want to know is called the income statement. Now, I'm going to highlight them or bring them out in an order that helps to build up information, and usually that is how they are done. You start with the income statement. So there are three types of financial statements that are critical, or even more important, that I would love to highlight. And so the first statement that forms as part of a financial statement is called the income statement. Now, from the name itself, income statement, it is self-explanatory. The income statement is simply a statement that highlights or even gives you information about the income that the company has been making, or rather even the revenue. It will give you the data, it will give you the information about the sales that the company has been making for a particular period. It could be a month, it could be a quarter, it could be even a year, depending on how you want to run the period, or how long or what period you want to cover when it comes to preparing the statements. And so other than that, the income statement, the other section of the income statement is the expenses. So it has the expenses. You cannot have income in your business minus the expenses. And so the income statement has the income, which is the revenue, the money that has been coming in your business, and then it also now has the section where it highlights the expenses that your business has been having. So going back to the income part, so the income is mainly the products that you are selling. You've been making money in your business through what you are selling. It could be a product, it could be also a service, And so whatever money that has been coming in, it needs to be accounted for, and the statement that is able to show you how much money has been coming in is an income statement. The other section of the income statement are the expenses, and the expenses will be different and will vary with the various businesses that you are involved in, or perhaps even the type of service, the type of business that you are running, right? And so depending on your business, you could have rentals, you could not have rentals, and so expenses are customizable, or even they are tailored to businesses and how the business is running, or even what type of industry the business is in. And so business expenses will vary, but an income statement in general will have the income and also the expenses part. It will have, on the expenses, examples that I can give will be salaries expenses, it could be internet expenses, it could be travel expenses, it could also be repairs and maintenance, it could also be fuel expenses. And so those two elements, the income and also the expenses, is what will form the income statement. And once you put in that financial data or even information and transform it into something meaningful, is what will make an income statement. All right. And so let us move on to the second statement. This is just an introduction to financial statements, so we'll not get so deep into it. And so the second statement that I want to bring out when it comes to financial statements is the balance sheet. Now remember, I have said that the order in which I'm bringing them out is the order in which the information feeds into the other. And so the income statement feeds information into the balance sheet. Remember, in accounting is all about double entry. There is the credit, there is also the debit entry. There's a debit entry, there's a credit entry. So every entry that is made in your books needs to have a double side to it, or double entry to it, and that is the core principle of accounting. And so with that double entry, when you're posting transactions on your income statement, you need to have another leg, or rather another entry being done on your balance sheet, and that is why the income statement feeds into the balance sheet. So the balance sheet will have sections such as the assets, it will have the equity, it will also have the liabilities. Now the balance sheet, as the name resounds, is a statement that displays the assets, the liabilities, and also the equity, which is the money that you've put in. And at the end of the day, this statement needs to balance, and that's the name balance sheet. At any point, it needs to balance. Okay, so that is the balance sheet. Now, like I have said, assets by definition is what the company owns, and the liabilities by definition is what the company owes, and equity is simply a representation of ownership. How much the owners of the business have put in the business in order to own it, or rather to have the equity or even the ownership that they need to have, and that is equity. And also that is the equation for the balance sheet, which is the assets, the liabilities, and also the equity. So the liabilities and the equity needs to equal the assets at the end of the day, right? So that is about the balance sheet, and that is some information that you would want to know, or even acquaint yourself with, which is from the balance sheet side. And so remember to always follow the principle, because when you prepare the income statement, you would have automatically also prepared your balance sheet. So it is note that the income statement is prepared alone and the balance sheet is prepared alone, but these two feed into each other. And the third and last statement that forms part of the financial statement is what we call the cash flow statement. Now, the cash flow statement its purpose is simply to track the cash flow of the business, which is the cash in and also the cash out of the business. It simply does that. It just tracks the cash that is coming in and also the cash that is coming out of your business. That is the cash flow statement. So at the end of the day, the cash flow statement needs to match the net figure that you find on the cash flow statement. It needs to match the cash that you have available in your business. Do you have this cash in the bank? Do you have this cash at hand? And so however you reconcile that, you should be able to get your net cash flow with what you have handy, right? So the cash flow statement has sections. It has the operating activities, which deals with the day-to-day business. So with your operating activities that you've been running in your business, how much money has been coming in, how much money has been going out. And also then it has the another section, which is the investing. So then it has to reconcile how much money did you invest in the business. Was it through assets, or how did you invest in your business? And so that is the other part of the investment. So it then highlights if you've made any investments in the business, and it will be able to track that through the cash flow. Then the other section is the financing activities. So what financing activities have you done in your business? So the cash flow statement will also be able to highlight how much cash you have used to finance your business and your day-to-day transactions or even activities. And that is about the cash flow statement. And so those are the three statements that will introduce you to financial statements, which is number one, the income statement, and number two, the balance sheet, and number three, which is the cash flow statement. So I hope these three statements, or what I have highlighted this evening, will give you knowledge or even interest to be able to know more, or even have the desire to just learn more about the financial statements and how they can help you with strategic decisions in your business, how they can help you with running your day-to-day operations, because they can reveal so much. But a bonus that I can add on the three statements that I've highlighted, which is the income statement, the balance sheet, and the cash flow statement, is that once these statements are done, once you have prepared your financial statements, let it not end there. Get in the habit of analyzing the data that these three financial statements have that these three financial statements have highlighted. What data have they highlighted that could be useful to you? You might want to use it for further financial analysis, just to get an in-depth understanding of what is going on in your business. So it could be through ratios, it could be through trying to check what is your profit margin, what is your equity ratio. If your business was unable to sustain or be in existence for the next foreseeable future, are you able to pay up your liabilities using your assets? So the financial statements really highlight a whole lot of things that you would not have known by just running your business without looking at the financial statements. And so today, or rather this evening, I would love to urge you all, please have your financial statements done and get interested in knowing your numbers. Let your business know its numbers. Let your business have the knowledge and the know-how of what to do in the next quarter or even in the next year, because today, if you have the data, if you have the numbers, you would then know what to do tomorrow. And so that is my encouragement for this evening, based on this topic that we had tonight. And so I really hope to see you next Wednesday as I bring yet another interesting topic. Bring somebody, invite them, and let them know that we go live every Wednesday at 19:30 with so much free content and financial literacy that we just pour out here at Too Many Payments. And so from me, Lillian Injovu, it's been a good and pleasant evening, and I hope to see you next week, Wednesday. Thank you.